Have you used all of the available small business relief provisions from the pandemic? My guess is you have not. And I have a special guest with me today who is going to talk about one in particular that so many businesses have overlooked. You do not want to miss this opportunity to put a ton of money back in your pocket. Hi, I am Tim Fitzpatrick with Rialto Marketing, where we believe marketing shouldn't be difficult. All you need is the right plan. I am super excited to have Jamie O'Kane from Abundant Beans back with me for a second time on the show. Jamie, welcome. Thanks for being here.
Thank you, my friend. Happy to be here again.
Yes. Well, so we were talking before we jumped on air. The last time I interviewed you was episode 14 of the Rialto Marketing Podcast. We talked about business taxes and accounting and some of the secrets that you have that you shared. We are now shooting episode 114. I planned it exactly 100 episodes later.
I love the symmetry.
Yes. Yeah, numbers people love that symmetry, right?
We love it.
So the last time I interviewed you, I was not asking rapid fire questions to help us get to know you. I want to do that this time. So when you're not working, how do you like to spend your time?
Reading, knitting, or on the Peloton.
Okay. Reading, knitting, or on the Peloton. Okay. What's your hidden talent?
My hidden talent is the ability to find the holes in shit.
Okay. I like it. Find holes, find the opportunities, and fill them. Love it. What's the best piece of advice you've ever been given?
Don't sweat the small stuff. It's all small stuff.
Yeah. Most of the things we think are big don't end up being all that big, huh?
Yeah. I think the other one is like make your own business rules. So you get to, it's your business. You get to do whatever the hell you want.
Yeah. Yeah. That kind of gives you permission to do what you feel like you need to do and just do
right.
it.
And I always say, like, when I do what I think I need to do, it gives permission for anybody who's close to me to that, like, sees that, to do it as well.
Yeah. What's one thing about you that surprises people?
I'm super creative.
Yeah, you don't normally think about that from a numbers person, do you?
Not from your accounting people, usually.
What does success mean to you?
Oh, wow. That's a good one. Success means flexibility. You know, the ability to do what I want when I want.
I agree. Where's your happy place?
My shower. Or the Peloton.
Or the Peloton. Okay.
I'm part of the cult.
Do you have a steam shower?
I don't.
I've always kind of wanted a steam shower, but part of me thinks that like the novelty would wear off and then it just becomes a total pain in the neck to clean.
It does. My aunt and uncle have one, and I'm like, I mean, it's nice if you're like sick or whatever, but
yeah. Other than that, it's kind of, it's kind of like, gosh, that thing, it's like a breeding ground for mold. So last one, what qualities do you value in the people you spend time with?
Authenticity. Of an abundant mindset. And critical thinking. That's my big ones.
So for those people that are tuning in that missed the last episode, tell us a little bit more about you and what you do at Abundant Beans before we jump into talking about this program.
So we are a tax planning focused CPA firm. So people usually think, H&R Block, lots of quantity with tax preparers, but that's not what we do. We do low quantity boutique style tax planning, implementation, and then tax returns and compliance on the back end. So we don't start with tax returns. We start with how can put mud dollars in your pockets through tax planning, where you're trying to go. Everything's goal oriented. Because if you don't tell me where you want to go, I can't help you get there.
Yep.
Otherwise, I'm just giving you the boilerplate here. Save dollars this way, which may not work into your goals. So we do some bookkeeping, but mostly tax planning based, goal based compliance.
So you don't put people into a box and
Mm-mm.
prescribe things that
Mm-mm.
you prescribe to everybody else.
Nope.
You figure out where they're at
Mm-hmm.
and create a plan to help them
Mm-hmm.
get to where they want to be.
Yeah, the example I like to use a lot is if you tell me you want to, save as much cash as possible to go do real estate investing, I'm not going to ask you to put your money in a SEP plan.
Yeah.
Here, put
Yeah.
your money someplace you can't access it.
Yeah. So
For us.
this is really interesting because although we are in two totally different businesses,
Mm-hmm.
we plan the same way.
Yeah, we do.
And I say planning is key to being effective all the
Mm-hmm.
time.
Mm-hmm.
And I'm not just saying that from a marketing standpoint. It's like, guys, whatever you're doing, you
Mm-hmm.
got to have a plan. So that's what Jamie does. She helps
Yeah.
put your plan together for your taxes so that you can keep more of what you make.
Mm-hmm.
It is super important. If you do not
Yeah.
plan, you're never going to have long-term success.
Yeah,
So,
I think, the big thing is like I ask people, I'm like, well, what do you want? And they're like,
yes.
to save taxes. I'm like, that's not a goal.
Yeah.
Saving taxes is not the goal. Saving taxes is the vehicle to get to the goal.
Yes. Yeah. What is saving taxes going to enable you to actually do?
Exactly. So what are you going to do with that cash? Because
Yes.
that informs how we help you save
Yeah.
taxes.
I love it. So let's talk about this pandemic relief provision that people are overlooking. It's the employee. Is it called the employee retention? What's the name of the program itself?
Yeah, so it's the employee retention credits.
Okay. So the employee retention credits. What the hell is this thing?
So these are payroll tax credits available to businesses in a couple ways. One, either they had impact on their business through governmental restrictions, so either a partial or full shutdown, and we can define that in many ways. Or there's a gross receipts test. So it's a 50% decrease for 2020 over 2019, or a 20% decrease for 2021 over 2019.
So if you can show that your business had to shut down for a certain period of time, or right? Is it one or the other? Or
it's or.
Okay. Or if you can show you have a decrease in gross receipts, then you can qualify for the employee retention credit.
And this is where people get really hung up. Is they're like, oh, well, there wasn't a decrease in gross receipts. I'm like, that doesn't mean anything. We have businesses that have higher gross receipts quarter over quarter that qualify under the governmental provisions.
So you have to have a keen understanding of all these provisions to really determine whether you're going to qualify or not.
Yeah, you do. And you have to know what were your restrictions? What do our restrictions look like?
Yeah.
And how did that affect our business? Is it it has to be a partial impact, partial full impact on operations. Like a really good example is a coffee shop. We have a client who's a coffee shop, but their indoor dining was shut down. That is a shutdown of, I mean, that's an obvious one, right?
Yes.
That is a shutdown of their operations, period. It's a partial shutdown. You know what? They made more money in 2021 than they've ever made. They're also sitting on a ton of credits.
Yes.
Because they can show that they qualify under the governmental shutdown. So it's an or.
Can you claim more money if you qualify? Let's say I qualify under the shutdown rules, but I also qualify under the gross receipts. Am I better off claiming one or the other, or does it matter?
Nope. So it doesn't matter. The credits are the same.
So it's just a bar you have to meet. Once you meet it, then you're actually determining how much you actually qualify for in credits.
And it's a quarter over quarter. So if for like first quarter, I'm under governmental restrictions, and I can claim it then, I can claim under that. And then the next quarter, I'm not under governmental restrictions, but I had the gross receipts. I can qualify under gross receipts. We're testing each quarter.
Got it. And this is for 2020 only?
It's for 2020 and 2021.
Got it. So yeah. So you're going to be doing these for a little bit. So 2020 and 2021 by quarter.
Yep.
Okay. 2021 by quarter.
They start like March 13th, 2020. So second quarter, third quarter, fourth quarter. We're not really doing anything back into those last few days unless we think it's there.
Okay, so this leads me to my next question. Why are many businesses missing out on this opportunity?
So here's the big thing. The original CARES Act back in, I don't know, what was that, May, April last year? Look, y'all, it's all running together.
Yeah, something like that.
So the original CARES Act made provisions also for the PPP loans. So it created the ERC provisions, and it also created the PPP loans. In the original CARES Act, you couldn't do both. If you had a PPP loan, you couldn't do the employee retention credits. And everybody knows about PPP loans, so nobody was looking at employee retention credits at that time.
Okay.
So that's why they're missing out. Because they did PPP loans, they didn't know about this. Most people just didn't know about these. Oh my gosh, it was one of the provisions either in December or January of 2021, where they said you can do both. You can do both employee retention credits and PPP loans. You just can't use the same wages for both of them. So you have to, we have to work around the PPP loans.
Got it. So I'm also guessing too that there's just so many different things going on at this point. It's just easy for people to overlook, right? There was so much talk about PPP, and then it's like they got the PPP, and then they're just like, okay.
Yeah. So PPP, there was the EIDL loans. Those kind of all went up at the same time. And then there's these provisions. There's the Family First Coronavirus. There's the FFRCA credits for sick pay for employees. Like there's a lot of provisions that came down. The big reason though is because everything was about PPP loans, which are free dollars. We know now they're free dollars. And everybody was scrambling for PPP loans. Nobody ever considered employee retention credits.
Yeah. One of the things that you touched on before we jumped on air, I know you will never talk bad about somebody you compete with, but one of the things you said was that you've come across people who have asked their current accountants about the employee retention credits, and they're just being told that they don't qualify. Why do you think that's happening? And actually, let me take a step back. That they don't qualify, and in fact, some of these people actually do qualify.
I think it's a combination of things. Look, tax preparers are tired, guys. We have dealt with 5 or 6 sets of legislation in the last 18 months.
Yeah.
We have, every time we turn around, the IRS will not respond to anything. Our client, like the amount of mess that has been created by the pandemic for the IRS, for your tax preparers, it's just a madhouse right now. We're all tired. I only did 30 tax returns this year, but the fact that every time I turned around, I had to learn something new. I had to learn how to do PPP loans. I had to learn how to do PPP loan forgiveness. I had to help our clients navigate the FFRCAs. Like, there is a lot of things that preparers may just decide that they don't want to deal with, or they haven't taken the time to learn enough about it to advise.
Yeah.
And that is just the nature of the beast with all of these changes. And let's be 100%, most tax preparers, most accounting firms work on quantity.
Yeah. It's a volume business.
They don't have time to do quality.
Yeah.
They just don't.
So if we pique people's interest, what are some other important things for them to know about the employee retention credits?
So let's talk about how much the credits are, because I think that's important.
Yeah.
So you can claim up to $5,000 per employee for 2020. And then it is $7,000 per employee for each quarter of 2021.
Okay, say that again. So $5,000 per employee for 2020 in total?
Yes.
And then in 2021, it's $7,000
Per quarter.
per employee per quarter?
So we're looking at up to $33,000 of credits per employee. Caveat, the Congress is working on tax stuff right now. In the next whatever budget reconciliation, whatever bills, guys.
Yes.
I don't follow any of this stuff until it's done. I just pay attention peripherally just to see what's going on. They might not allow fourth quarter PPP loan or ERC credit. So, but anyway.
So that may change, but up to this point,
change.
You still, whether they change that or not, you can still qualify up to third quarter of 2021.
Yeah.
So depending on how many employees you have, this can be a ton of money.
Yeah. And so the credits are, of course, it's never that easy, right? So the credits are 50% of up to $10,000 of wages for 2020, 70% of up to $10,000 of wages per quarter for 2021. So if you have an employee that makes $40,000 a year, you can get $33,000 of credits on them.
Okay. And when we talk about a tax credit, how do tax credits work?
So these are payroll tax credits. So what they do is generally what we're doing is filing amended 941s. So they have to be filed with the IRS, and then the IRS will send you a check eventually. We don't know. We're looking at 6 months-ish at this point.
So they are actually sending you a check.
Yep. If we can currently do it, then you can, save your payroll taxes, and then they'll pay you the rest later. But what these are, though, and one thing I want people to make sure they understand is this is a reduction of your wage expense. So whatever you're getting in credits is really technically added back as taxable income.
Got it.
I don't know about y'all, but I like money, and I'm happy to pay my tax rate on it. So if someone's going to hand me $100,000, I'm happy to pay $25,000 on it to keep the $75,000.
So this comes back to tax planning. As long as when that check comes in, you set a certain amount of that aside to pay your taxes.
Yeah.
You will not have a surprise at the end of the year.
Yeah, I mean, all of our clients that are doing this, obviously we're doing tax projections for them, so they understand what this is going to look like dollar-wise. But just making sure that people understand that piece, because I think because the PPP loans were free money, people really think this is free money. And it is free money up to a point, right? So you get to keep a lot of it, a large portion of it.
Well, who wouldn't take $100,000 and have to pay 25 of it back out?
Yeah. The other consideration
or whatever it may be for you.
Right. The other consideration is we're filing these back into 2020. Usually these returns are already filed. So we're going to need to do amended filings for those, because it's whatever year those pertain to that we need to be claiming those dollars.
Got it. But they can still go back and do that.
Yeah, no problem.
Yeah.
Happy to do those.
So there's time for that.
There is time for that.
Yeah. Got it. Anything else that we need to know about these credits?
So like I said before, there's an intersection with the PPP loans. So many of our clients and many of the people that we're looking at now, they've already filed for forgiveness on their PPP loans, which is great, which is fine. The thing is we can't use the same wages. So there's different ways to file for forgiveness on the PPP loans. If you haven't filed yet, it behooves you to have us look at it before we're filing, because we can allocate more dollars to ERC if you qualify, if instead of just using 100% payroll. Most people are just using 100% payroll on their PPP loan applications. That means we can't use 100% of those wages, which is fine. Generally, it works out fine. But that's another moving piece potentially when we're trying to maximize ERC.
Got it. Because PPP, you had to use a certain percentage for payroll, but you could have used it for other expenses. So if they haven't filed already, if they can allocate some of that over to those other expenses, they're going to get more from ERC.
Mm-hmm.
Do I understand that correctly?
You got it.
Okay. Got it. This is a super cool program, and I know a lot of people are not talking about this.
It is super cool. I mean, I told you right before we hopped on, I just did one for a new client, $189,000 in credits.
Yeah. That's crazy.
I'm blown away by the dollar amount.
No, we need to say your actual results may differ.
Obviously.
Everybody's in a different scenario,
Obviously.
but there is a lot of money on the table here.
Mm-hmm.
You need to take advantage of this. And I know you won't say this, so I'm going to say it for you. Guys, if you have any interest in this program, you need to reach out, Jamie, because look, it's obvious that there are way too many moving parts here. Most CPAs are not dipping their toe in this water. That should tell you something. If you want to maximize what you get, you need to work with somebody that knows what the hell they're doing and knows this legislation inside and out and all the rat holes that you could potentially go down. So it is worth the money to pay somebody to do this for you. Jamie can do it for you.
Yeah. And honestly, this is super fun.
Yeah. So, and Jamie loves doing them. So
I do. I love it. I think this is, it's always funny because like, I am not your snake oil salesman. I am the person that's like very conservative. Like if I'm doing something, it's because like it's legit. Like we're not doing crazy, tax deferral.
Right.
We're not doing that. We do everything within the bounds of the code. Because there's a lot for us to work with there. But this feels like, I was looking at this and like sometimes I'm like, this just kind of feels like snake oil. It is real. It is real.
So where can people, if we got them hooked here, they are interested in at least finding out whether what they can they qualify, what might they be able to qualify for? You guys are offering a service that helps them do just that, right?
Yeah. So we're doing, we offer an analysis. It's $11.95. Okay. So they can go to ametabeans.com/ERC. That's kind of our landing page. There's blog posts there. There's, we have a free download of a spreadsheet where you can enter your info if you feel like you want to, see if you qualify on your own. And we have podcast episodes and, just a whole smattering of info on this because I'm trying to get this info out to people. It's just because, again, they're just missing out. They just don't know it's a thing.
So go to abundantbeans.com/ERC. Guys, $11.95 to find out whether you qualify and how much you might qualify for, in my opinion, is well worth it. Take some of the PPP money that you got that was totally free and just spend $1,200 of that to find out, because you could put a lot more money back into your pocket as well.
Yeah. I mean, it's just one of those things. I mean, really the people that we feel like are, if you're in this category, if you have, if you have a forward, customer facing store, if you are, doing, personal services, veterinary, dental, these are the ones that really are missing out on these coffee shops, restaurants, anybody that was open with people in it at some point during the pandemic with restrictions. So what your restrictions are in your business. But these are the ones that are probably missing out on those because, those of us that run virtual businesses like Tim and I, like we already work from home. There's nothing we can do about this, right? No. Like we were already virtual. We didn't have any restrictions. But if you have a client facing, retail shop, business service provider situation, you likely qualify just based on the government restrictions between, the government's office. Like I'm looking at one in a different state right now, and it happens to be their Supreme Court that did all this. I was like, I can't find yours.
Yeah.
But it's the governors, it's the health departments, it's the county health departments. We have to dig for these a little bit. But we are seeing people, qualify through June of 2021. from March of 2020 to June of 2021 because of all the restrictions and when they were lifted.
What about like contractors, like HVAC companies and electricians, those types of places?
Yeah,
If they had it,
definitely.
I mean, if they dealt with any kind of shutdowns or
Restrictions of some sort.
reduction in revenue,
Mhm.
it might be
Yeah.
worth looking at.
Yeah, and I think a lot of our, it really kind of dawned on me, like, because I went to my dentist and they had to like schedule her in a way where she could change between, like, she had to literally like change clothes between each appointment
Yeah.
for a while. So, and they had to like, they kept kind of like having to move my appointment around, and like
Yeah.
they had to like very strategically like change how they do appointments, and they were doing less appointments per day because of this. And like I was like, do you know about the employee retention credits? Because this is a partial reduction of operations, right? And they went for a cleaning and they couldn't do this, that, and the other thing. Like, and they were longer appointments because everybody had to, everything was, they were doing less appointments and less days, with less people.
Yeah. Oh man. Guys, just reach out to Jamie, please.
I'd like to be like, it's super easy, but
yeah,
nothing's ever super easy.
No, but there are a lot of businesses out there that obviously qualify for this that have not taken advantage of this. Just go to abundantbeans.com/ERC and have Jamie do a review for you to figure out whether you qualify. And coming out of that review, you guys do a deep enough dive where you can give them a fairly good idea of what they qualify for, correct?
Yeah. So we're doing, I'm an accountant. I have spreadsheets. Like, I'm doing a very in-depth analysis generally. We're giving them a very solid estimate of what they think they can qualify.
Okay.
Our clients that we just did 189,000 for, I quoted him 180. I'm always going to underquote. Yeah. But because I always want it to be more than I think it's going to be. I do that with tax planning too. Under promise, over deliver.
That's right. Under promise, over deliver. So any last minute thoughts you want to leave us with on this employee retention credit program?
Yeah. So there's also a startup recovery credit that is an additional provision under this that is available for people who who started up after, I can't remember what the dates are, but it's early 2020. If you have a startup business or you started a business and have another business, there's an available credit for third quarter and fourth quarter of 2021. Basically, it's just another way to qualify. And it's up to $50,000 per quarter. So up to $100,000 in credits for those quarters. If you started a business in 2020, if you have other businesses or whatever, there's aggregations and stuff and things. But basically, if you started a business anytime between now, tomorrow, and early 2020, you might be able to qualify under that provision as well.
Okay. Awesome. I love it. Jamie, thanks for taking the time.
You're welcome. Thanks for having me.
Yes, people, just reach out to Jamie, please. I want you to put more money into your pocket.
That's what we do over here.
Yes, I can vouch for Jamie 100%. She is not a snake oil salesperson.
No, we don't do that around here.
So yeah. So look, just do a Google search on employee retention credits, see what comes up, reach out to Jamie and she'll fill you in on all the other nitty gritty details of this. So thank you for tuning in. Again, I'm Tim Fitzpatrick with Rialto Marketing. If you are struggling with your marketing, you're not sure what that next right step is, you're trying different tactics and nothing seems to be working, hop on over to our website, rialtomarketing.com. That's RIALTO marketing.com. Click on the get a free consult button. Guarantee you will get a ton of value from that call and have some clarity on what your next steps need to be. Thanks for tuning in. Until next time, take care.